The key earnings which came out in yesterday's trading session, yesterday post-market hours, Dr. Reddy's announced its Q3 numbers, which reflected a 2% increase in the net profit, but still managed to miss the estimates. Varsha brings in the key highlights and breakdowns in numbers for us. Hi, morning, Varsha. What are you picking up on Dr. Reddy's?
Good morning, Anushi. So yes, as you rightly said, the net profit did miss estimates, though the revenue growth was in double digit, but there are reasons for that. The double digit revenue growth that we are seeing, it's led by milestone payment of around 120 crore and also government grant of 80 crore. And the growth was led by newly acquired their NRT business. Excluding the NRT business, the growth was only 7.5%. The EBITDA margin contraction that we are seeing is led by lower Revlimid, that is a cancer drug contribution, and elevated selling and general expenses. The India growth, if you see, was the double-digit India growth was led by vaccine portfolio from Sanofi new launches and price increases. The North America business, if you see, that degrew 9% quarter on quarter, but grew 1% year on year. But overall, this was not expected. There's been weak set of numbers when it comes to North America business. Higher volume in US based business was offset by price erosion, and quarter on quarter US growth impact was due to lower sales from the Revlimid contribution. So overall, if you see, the double-digit growth that we are seeing is not because of the core business. There was a weak core business that the company has seen, and the double-digit growth is led by the government grants and also the PLI scheme. Let's see what brokerages are saying. So Jefferies has maintained underperformance. They've cut their target price. They say that Q3 is a miss on weak core revenue and high selling and general and administrative expenses. Underlying revenue growth moderated to 7.5% year on year, and the weak US and core India sales offset was offset by strong performance in Russia, UK. Nuvama Well has retained buy with target price of 1,533. They say that the current valuation is attractive, and the company is preparing for Revlimid's fall, and they're set to taper in H2 FY26, and Nuvama expect it to retain large part of Revlimid earnings, but the key product approvals remain critical according to Nuvama.
Okay, well, that's the brokerage's view. And what are the key takeaways for Dr. Reddy's? In fact, we also spoke to the CEO of the company, MV Ramana, about how the quarter was gone by. Listen into what he had to say as well.
In terms of what we have been telling in how we are looking into the business is 25% EBITDA and 25% ROC. So we're pretty much in line with what we had expected. And again, if you see what the organization is doing is basically, while growing the base business, also investing in the future businesses in terms of innovative assets, consumer health, and biosimilars. So in line with the investments that we continue to make while we drive the productivity on the existing business, we are able to deliver the EBITDA that's in line with the guidance that we have.
Well, Dr. Reddy is in focus today after the Q3 numbers, but another stock in focus